Hi everyone, I'm Humaira Mullah, the founder of HM Accounting, and in today's video we are diving into a topic that can save you thousands of rands every year, which is how to structure your business to legally pay less tax in South Africa without cutting corners. So whether you're just starting out or you are looking to optimize an existing business, then this video is for you because we are going to be understanding your structure and deductions, which will all make a difference. Let's go ahead and break it down step by step. So, the first thing that you need to get right is your legal structure. This affects how you are taxed, what deductions you can claim, and even how much protection you have. There are three main types in South Africa. So the first type is the sole proprietor. You and your business are the same entity, right? You operate as an individual. You're taxed under individual income tax rates, which can go up to 45%. Very simple to set up, but you miss out deductions available to companies. Now, a private company, which is a PTY Ltd, it is a separate legal entity. It has a flat corporate rate currently at 27%, and you can claim more deductions like your own salary deduction, business expenses, research and development costs, and so much more. And then we have trusts and partnerships. Now, trusts are a bit more complex and they are often used for asset protection or for family businesses. They are taxed differently, so do get professional advice if you are going this route. And I'm also going to be doing a video on trusts, so you'll get further understanding in that. My pro tip to you would be is that if you are growing or earning more than 500,000 Rand a year, a PTY structure is often the most tax efficient way to go. I've also got a video that I did with Hilal TV, which explains the different company structures in detail, as well as the tax benefits and consequences of each, but also takes in other things into consideration, such as growing your business and the risks associated, the legal obligations, right? Now, once you have chosen the right structure, comes in your deductions. Now, these are your business expenses that SARS allows you to subtract from your income. So you only pay tax on what is left. Now, here are some common and very legal deductions. Things like your rent, your utilities, your internet, your salaries and wages, marketing, advertisements, any social media boosts, professional services like your accountant, office equipment, computers, software, travel expenses, and vehicle costs. Do have a logbook though. Depreciation on assets, so also known as wear and tear. But let's take all of this a level deeper and look at the advanced SARS deductions. Now, these are very powerful incentives that many business owners miss. There are five, or I'm going to give you five SARS-approved deductions that can seriously reduce your tax bill and that you could probably start implementing some of them. The first one is the employment tax incentive, the ETI. I find this is so underused and just not used enough. But basically, if you hire staff that are aged between 18 and 29 and they are earning between 2,000 and 6,500 Rand per month, you can claim up to 1,500 Rand a month per employee. It is a PAYE reduction that you can claim through your EMP 201 submission, and it is perfect if you are growing your team while supporting youth employment. Number two is research and development deduction. So this is the section 11D. If you are investing in innovation, which are things like developing new software, improving a process, or creating a new product, you can deduct 150% of that qualifying cost. Now, this must be pre-approved by the Department of Science and Innovation, but it is worth it if you are in the technology space or manufacturing or even agricultural processing. Number three is the learnership allowance. So if you are training staff through registered learnerships, you can claim up to 80,000 Rand per learner per year, especially if they have a disability. And it is a really great way to boost your tax efficiency and empower your team. Number four is bad debts. If you have tried everything to recover money that a client owes you and it is clearly not coming back, then you can write it off and claim it as a deduction as long as the income was originally taxed. Number five is depreciation or your wear and tear. SARS allows you to write off the cost of your business assets over time. So these are things like your laptops, your printers, and your office furniture. For example, a laptop depreciates over 3 years, right? So that annual deduction lowers your taxable income. Now let's talk about a salary versus a dividend and paying yourself. And if you are running a PTY, a private company, you can pay yourself in a more tax efficient way. Now, a salary is deductible for the business, but you pay personal income tax on it. A dividend is not deductible, but it is taxed at a flat rate of 20% withholding rate. Now, a smart move would be to blend them. So this lets you reduce your company's tax bill while keeping your personal taxes manageable. Also, remember that documentation is everything. If you want to claim a deduction, SARS requires proof. So keep your detailed fixed asset register, invoices and receipts for all of your business purchases, a logbook for any vehicle claims, contracts for learnership or for ETI employees, timesheets and SARS letters for research and development approvals. Also, do use digital accounting software. I've also done a video on that, so go have a look. There are options like Sage, Xero, QuickBooks, or even just a simple spreadsheet to start, right? Before we go on further, I do want to also bring to your attention that if you are a small business, in South Africa, there are special rates that can apply, which is called SBC rates, but you do have to meet certain requirements. And I'm going to go into more of the deductions in a different video because there are so many, it's really detailed, and I'd like to do a detailed video on that. But for now, I'd like you to know that if you are a small business in South Africa, you meet certain requirements, you can actually use reduced SARS tax rate. So you are not reduced at the 27%. You have special tax rates like an individual that's taxed on a threshold. It's similar for an SBC, and that is so beneficial when you are starting your company. It gives you a bit of a breathing space, a bit of a room to grow. So yeah, I would definitely advise that. But again, it's going to be if you meet certain requirements, and you can always discuss that with your accountant as well. But let's now just recap what I've said. So, firstly, structure your business as a PTY Ltd if you are growing, which I think anyone who wants to get into business has the plan to grow. So, do structure as a PTY. Claim every legal deduction, big or small, and keep documents for it. Use incentives like the ETI and research and development to save money. Pay yourself smartly, and like I said, again, keep your records squeaky clean. You cannot be claiming personal deductions on your company name. The invoices must have the company name on it. So these are important things that you need to ensure your documentation is in order because SARS has gotten much stricter and there's more audits going on. So you do want to have that taken care of and so that you are stress free. Now, if you are unsure of any of this or if you are worried that you've been overpaying taxes, you probably have. And at HM Accounting, we specialize in helping businesses structure, plan, and to grow all while staying tax smart and compliant. So get in touch with us. I will put all of the links in the description box below. The reason why I've also not done this into a longer video or into a PowerPoint presentation is because we are compiling this into a freebie, and I'm going to put that link in the description box. So go ahead and get the freebie for this. It's going to have all of what I've just said at your disposal, which you can always refer back to and just confirm those steps. So please do go and get that freebie so that you have that to utilize and watch the video with this hand in hand. Now, if this video was helpful, please do give it a thumbs up, subscribe, and hit that notification bell so that you do not miss the next one. And again, if you need help with tax planning or with registering for taxes or just company restructuring, please do visit our website at www.hmaccounting.online or contact us on one of our options that we will list below to book a consultation with us, 30 minutes free. Also, we do Sage consultations and training, so you can get in touch with us for that, and we can set up a whole digitalized system for you. Again, thank you for watching, and remember, it is not about how much you make, it is about how much you keep. See you in the next video.